President Trump says he's considering breaking up big Wall Street banks, separating the consumer side from the investment banking side. Dick Bove joins us now, Rafferty Capital Markets banking analyst. Dick, you and I have had this conversation a few times over the last couple of weeks. But what would you say to President Trump, who's tossed this out there after meeting with community banks? Perhaps this is a solution. Obviously, those community bankers had a gripe.
Well, of course they have a gripe, but why don't we talk about something different related to that particular subject? You had, not you, but Maria had Steve Mnuchin on a couple of days ago, and she asked him, how do you put sanctions on foreign countries, you know, Russia, Iran, North Korea, et cetera? And the answer that he gave was the first level of sanctions are to remove the ability of these countries to operate with the United States financial system. Now, the problem with that is that, you know, Citigroup has now pulled out of 30 countries around the world on the ground. It's reduced its position in Germany, Japan. You know, Bank of America, you know, has pulled back Merrill Lynch from operating overseas. J.P. Morgan has gotten rid of tens of thousands of customers, literally, around the world because of government regulations. So the point that I'm trying to make to you is if you keep shrinking the size of the American banks, if you keep pulling them out of the international operations, you're creating a vacuum into which the Chinese have already stepped. In other words, when the WTO agreement was signed with China, basically China had a couple of maybe 10, 15 banks around the world that would accept its currency. There are well over 10,000 banks around the world that accept its currency now. The IMF has created the yuan as being an international reserve currency. Right. So, you know, we're shrinking, they're increasing. We want to shrink some more.
The fact of the matter is that the yuan right now is the number 5 used currency, though, in international transactions at about 1.5%. I get what you're saying. But I'm not sure if I'm connecting the dots in a way that the person watching this show who feels that, you know what, maybe Chase Bank, not J.P. Morgan Chase, but Chase Bank wouldn't lend me money if they didn't have alternatives like trading commodities instead.
Well, you know, we've gone over this multiple times. Clearly, the biggest profits at Chase Bank, in fact, Chase Bank is totally a consumer bank. All of the profits come from, you know, lending money to consumers.
Chase Bank, but can it be Chase on its own, Dick, without the J.P. Morgan part?
Well, if it is, then basically the cost of money is going to go up. The amount of products that, like mobile banking, internet access, go away. And therefore, you're basically asking the consumer to take a hit, you know, to pay more for banking services, to get fewer of them, so you can benefit companies like Goldman Sachs that if the banks were broken up would see no impact on their business whatsoever, other than their ability to increase market share.
I'm going to have to let you go because I've got breaking news. I always appreciate having you on. We're going to finish this discussion. And meanwhile,